Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. Recently I've been looking at my portfolio and start thinking again that watch list that we shared with you guys recently, and I'm updating it and I'm like, some of the companies have now basically getting back to where they were in April, in February time. Okay, and it just feels when things are down, it's nice and easy to find basically cheap stocks. But right now things are becoming a little bit expensive. But you know what? The overall, as you can see right now, we've crossed £60,000 right now, and actually haven't added any money this week. Okay, so all of that's just capital gains, not capital gains. It's basically price appreciation, right? And as you can see, it's almost £8,000 or 15% up right now. In a way, it's nice to see that. It's nice to see there's every single stock that I own right now is green, apart from three, I think. Rio Tinto, Unilever, and VF are the only three that are still in the red. Every single other, every other company is actually now in the green. And including Home Depot actually reported their earnings report today. It was a very good report, and right now they're up almost to 5.5%, which is really nice. But then it's becoming a little bit more difficult. I was just hoping, this is one of the companies I was hoping will go down today quite a bit, and I can just pick up a few more shares, because ideally I want to own about 15 shares of this company. But right now it's gone back up again, so now I'm 25% up, or £667 right now. So in a way, I'm not complaining genuinely, but it is nicer when stocks are down, because so I can buy more, especially right now. But again, you know what? Next few weeks things might change. If it changes, then I'll pick more stocks. If it carries on going up, I am definitely buying more. And I know some of you asked me questions in the last couple of days. I haven't had the chance to answer, but I've seen some of your questions. And when it comes to things like dollar cost averaging and so on, I am basically going to talk about that today. So recently, some of you asked me questions about when is the best time to actually buy stocks, when should I dollar cost average, what should I do, and so on. So I was doing a little bit of research about 3 weeks ago, and I found this article that I want to share with you guys today. Okay, this is one article that was basically written by Charles Schwab, which is basically one of the biggest asset managers in the US. And what they've done is they have done a research, and they basically created these 5 investing styles. Okay, so there are 5 hypothetical individuals, but they've done the data behind it. So they looked at the data. The people aren't made up, but the data is real. Okay, so they used the data from the basically in the last 20 years. So what they've done here, they've got 5 hypothetical individuals, each invested about $2,000, but different times. Okay, not all of them invested. I'll show you in a second. So what's happened is, since they've invested in the last 20 years, okay, $2,000 every single month, some of them, and I'll show you exactly what happened. So they started early 2001 up to 2020. So what's happened is this. Okay, so the first person was called Peter Perfect. Okay, was a perfect market timer. So this person timed the market perfectly. Every time he bought stocks were at the bottom of that, basically the lowest closing point. Okay, so that's what you call perfect market timing. So his $2,000 were invested at the bottom of the markets every single month. Okay, every single year. Okay, so they start up the beginning. He actually puts those $2,000 in and completely leaves out. Then what happens? So the next person is Ashley Action, which basically took a simple, consistent approach. Each year, once she received her cash, she invested basically $2,000 in the market. So as soon as she gets the market, basically that money, at the beginning of that year, the first trading basically day of the year, January, whatever, the 1st, the 2nd, the 3rd, right? She invested her $2,000. So we have one person who's basically perfectly timed the market. Okay, it's invested $2,000 at the beginning of each year, the beginning of basically once every year, and timed the market perfectly. And we have one that doesn't really care about timing the market so far. She just puts in her money in at the beginning of the year, the first trading day, and completely forgets about it. The next person is basically divided his annual $2,000, okay, into 12 equal portions, which he invested at the beginning of each month. So this is your dollar cost average kind of guy. So this strategy is known as a dollar cost averaging, which is what I'm doing right now. Okay, so every single month, so he has $2,000, so he's now divided equally, okay, and he's putting that money to work every single month. Okay, so that's the third person. The fourth person had incredibly poor timing. So, okay, and what this person has done is she invested her $2,000 each year at the market's peak, so the highest point. Okay, that is the opposite of the person who invested, okay, the lowest point of the market. So those are the four individuals. Then we've got Rosie Rotten, had an incredibly poor timing. So that's we've done that one already. Then we've got Larry. Larry doesn't actually, so left his money in cash investments. So he's using treasury bills and all of those stuff that are not compliant with us anyway. He was always convinced that lower stock prices will somehow happen at some point. So he's got his money in cash and other things. He's not really invested in the stock market. So these five individuals have invested, basically had different strategies. So what we want to see now is who actually basically came up on top, who made most of the money, because that's what we're really interested, right? Is it the person who timed the market perfectly? Is it the person who really didn't care and invested her money at the beginning of the year? Is it the person who's actually dollar cost average every single month? Or is it the person who's actually had incredibly terrible poor market, okay, poor timing, okay, in the market? And or is it the person who's completely and utterly said, you know what, I'm not going to invest, I'm going to wait and wait and wait. So let me show you the graph and let me show you what happened, okay? Okay, and this is exactly what happened. So perfect timing, the person who was timing the market perfectly had made $151,391. This is after 20 years. Remember that, okay? The person who invested immediately, so the lady who got her money and then invested at the beginning of the year, okay, as soon as she got the money, she just invested it straight away, made $135,471. Okay, the person who dollar cost averaged made $134,856. Okay, so not much of a difference between the investor that invested immediately and the investor who dollar cost averaged into the market. The bad timing person made $121,171. Again, not really bad. Okay, even though they never timed the market perfectly, they were okay, right? Then comes the person who stayed in cash, and that person has $44,438. Now, what this shows me is, number one, stay in the market, stay invested, because that's really important. Because if you're a long-term investor, you shouldn't be worried about what the market is doing right now. Right now, we are going up and up every single week. Trust me, I'm not complaining, but it just feels like we're going back to the way we were in 2021, when the situation was just euphoria. Everybody was buying, stocks were amazing. Basically, everything was basically going to the moon, right? I don't want that to happen again, because I'm still in the early days of, putting money to work. By the time I retire, whatever, then fine, you can go to the moon if you want. But right now, I want to buy stocks. I want to add more money every single week, and it's becoming a little bit more difficult. The person who dollar cost averaged, okay, is really important. That's the one we need to talk about the most, okay? So perfect timing, nobody can do that, all right? Genuinely, no one can do that. And you should never try to time the market, okay? If you can, well, go for it. But I'm telling you, it's it's almost impossible. The person who invested immediately is perfect, is really good. If you got £20,000 sitting in the account and you want to invest, right, instead of maybe dollar cost averaging, the research based on this company shows that it's actually better for you, okay, to actually put that money to work straight away. Now, dollar cost averaging does two things for me, right? Number one, I don't have that sort of a cash just lying around. I'm using my salary. So I get paid, then I invest. I get paid, then I invest, right? So that's what I'm doing, number one. And number two, I don't want to put all my money in one go, just in case. I'm that kind of person who's a little bit cautious. So if I had £20,000, I will do what basically dollar cost average. I will dollar cost average into the market every single month. Instead of that, I'll divide that money and I will dollar cost average, because that makes me feel comfortable. Instead of putting all £20,000 or £10,000 straight into the market, right, I will hold back a little bit. And the research shows it's not much of a difference. 135,000 and 134,000. There's not much of a difference. And it gives me that peace of mind. At the same time, I'm investing the money that I'm receiving from my salary. So again, that's another advantage. So if you're sitting there thinking about right now, what should I do? The market's going up, it's gone up in the last few weeks, and you see your portfolio, everything is just gone up, right? It's good news for us. Alhamdulillah, it's nice to know that things have actually improved since we were in the red. 3 months ago, I think it was around here. There we go. We were in the red, right? Look at that. 20th of June, we were in the red, right? About just over a month, we are now almost £8,000 in gains. So that's how much we've gone up. So if this kind of thing worries you, just stick with the research. Dollar cost average every single month. I'm still doing my £250 a week. Whether the markets are up or down, I don't care. Okay, I'm buying. I bought just today. I invested, I think, £200. Okay, yesterday I put a little bit more money than that, because I've actually now trimmed one of the stocks that I own and actually bought another stock that I think is basically better valued right now. So I am doing a portfolio balance and I'm buying every single week. So I wanted you to understand, you know what? It's not bad to dollar cost average every single month into the market or every single week. If you've got the money, you've got the guts, then go for it and do it, invest it straight away. But whatever happens, don't stay in cash. I'm not giving you advice, but I'm giving you advice in terms of saying to you, you know what, you should be in the market and you should be. But in terms of financial advice, where you put that money, that's your decision. I will be honest with you, you will be better off based on basically this research, okay, invested in the market rather than having that basically in your account. So I hope you enjoyed this video, and if you like this kind of content, please like the videos, subscribe to the channel and share with your family and friends. I hope that was helpful. Have a wonderful day. Assalamu Alaikum.